Billionaire entrepreneur Mark Cuban says that he's actually a big fan of what's playing out between retail investors and hedge funds around shares of GameStop. Users of Reddit's Wall Street Bets forum have helped bid that stock up massively this week. Last night, Cuban tweeted, "I've got to say I love what is going on with hashtag Wall Street Bets. All of those years of high-frequency traders, front-running retail traders, now speed and density of information and retail trading is giving the little guy an edge. Even my 11-year-old traded with them and made money." Mark, of course, as you know, is also the owner of the NBA's Dallas Mavericks, and he joins us right now on the Squawk Newsline. And Mark, I want to hear your thoughts on this, because I get it. I love the sentiment of being able to stick it to the hedge funds. And what the hedge funds have been able to do in some cases has been really, really bad news. But if you're manipulating market prices, I don't see how that's a good thing, really, in any scenario.
How is this any different than what every brokerage firm does? You know, we've been talking about get long, get loud for
it's not
generations.
It's not good for the brokerages to be doing that at all either. I'm not defending that. It's just when you see moves like this, it's a little crazy. And I wonder what Doug Parker is thinking. I wish we could get him back on to ask him what he thinks about his stock being up better than 50%, because I would think that makes a company pretty hard to run, too. How do you live up to those expectations now?
Oh, but they're not expectations at all. I mean, look, the reality is you just have to run your company and do your best. It doesn't change the fundamentals of the company at all. You know, it so many respects is window dressing. And if you are an owner of American Airlines, if you're an owner of GameStop, hopefully, you know, prior to all this, hopefully you owned it for a good reason and you believe in the company. And all the not even manipulation, all the swings in the price of the stock, it's all just mishigas, right? I mean, if it's a good company, it's a good company. If it's a bad company, it'll end up going out of business. And, you know, the people who, you know, bought it just to speculate, some will make money, some will lose money. But that's just the way the market's always worked. The only thing that's really changed is the speed and the density and the reduction in friction for smaller traders to trade. That's the only thing that's changed.
Yeah, I mean, look, it's good news in terms of crowdsourcing, being able to have the same heft that some of these really big whales have on their own, if you can get this together. But we don't know who some of the people on the chat boards are or in Reddit are on these threads who are saying some of these things, too. Do you worry that some of the Wall Street guys could get behind that, some of the big guys, and manipulate those things?
Yeah, but it's not really manipulation. It's absolutely no different than what has always happened, Becky. You know, it's just these folks are picking things where, you know, heavily shorted stocks. They'll go to low float stocks because they know they can flex and show off, you know, and let people see what's going on. But look at it the other way. What if they go after companies that are really good or maybe smaller companies that are have a great social mission and get people not just to buy them in mass and quickly so the stock price skyrockets, but also to hold on to them or, you know, in cryptocurrency terms, hodl them so that, you know, that company really can grow based off of the valuation of that stock. You know, so I think now it's just a flex. You know, they picked the right place to show off with these heavily shorted stocks. And, you know, hopefully they'll go to good companies, too, and help them grow. And we'll see a positive side of this that hopefully will have long-lasting effects.
Look, I think one thing this definitely does is shines a light on some of the behavior that regulators really should step in and take a look at, some of the behavior by the hedge funds. If you're able to short more than 100% of a stock, if you don't have to disclose your shorts ever, if you can do one thing and you know, say one thing and do another, I think that there could be a call for additional regulation coming on that. What are your thoughts there?
Well, I mean, if you're misleading, right, if you're pumping and dumping to the upside or if you're shorting and misleading people to the downside, yes, that's obviously something the regulators should look at. But remember, when you short a stock, there's a VIG on it, right? You have to borrow it, and you're paying some percentage to the whoever owns the stock and is loaning it out. And as someone who's shorted stocks many times, you know when that VIG is high, you know exactly what you're getting into, and you know exactly what the risks are. You know, and you just hope something like this doesn't happen. But again, it's not the first time that low float or heavily shorted stocks have been targeted. It's just very visible, and it's just not the normal suspects that are doing the targeting. There are many hedge funds that have made a lot of money over the years targeting heavily shorted stocks. And so I don't think this is anything different. It's just the people who are making the push aren't who we expect them to be. And so that's why I like it. You know, when you bring people out of nowhere to really show the inefficiencies of the market, it's a good thing.
Shepard Smith here. Thanks for watching CNBC on YouTube.